Now, when it comes to SCHD or the Schwab US Dividend Equity ETF versus JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF, there's lots of different schools of thought on whether or not each one of these ETFs could be better for an investor to buy into and potentially achieve financial freedom through dividend investing alone. Now, I have a lot of thoughts when it comes to SCHD and JEPQ personally because I currently own thousands upon thousands of dollars of each of these ETFs in my long-term portfolio, and I'm honestly all around just a huge fan of both these ETFs. Now, in the past, we've talked about whether or not SCHD or JEPQ could be a better investment opportunity, especially for a long-term investor, and I share with you guys things like the dividend growth rates over time and how that could turn out later on for investors. But in this video specifically, as you can see right here on the screen, I went through and built out a very detailed list about SCHD and JEPQ and wrote down all the pros and cons of each of these ETFs to truly figure out which ETF is better perhaps, and especially better for you. So I promise you, if you're a dividend investor and if you hold SCHD and JEPQ or either one of them, definitely stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, before I break down all the pros and cons of investing into either JEPQ or of course SCHD, and I promise you guys you're going to get a ton of value from this. Just to back things up for a second, SCHD is a very popular dividend growth ETF. It's very cheap to hold on to. It's performed very well historically, offers a decent starting yield, but the magic with this one is the fact that this ETF offers massive dividend growth, which at least historically speaking has paid investors more and more in dividends over the years. Now, JEPQ on the other hand, the JP Morgan Nasdaq Equity Premium Income ETF is a rather newer ETF that offers a premium income strategy which invests in the Nasdaq 100, but then with the use of options, offers investors a lot of yield from day one, somewhere around 8, 9, 10%. So investors like myself over the years have invested into both these ETFs. A lot of you guys probably watching the video also have, in order to receive income from day one, or of course, investing in SCHD, for example, and receive more and more income over time. But now to get right to the bottom of it, I want to go through some of the pros and cons when it comes to SCHD and JEPQ. And before we go through all these, I did want to just mention that I, once again, am a huge fan of both these ETFs. I think they both have a place in a lot of our portfolios depending on what our strategy is. Now, just to make things clear, my strategy is to invest into dividend-paying stocks and ETFs that offer dividend growth and or a nice starting yield. Because for me personally, as you can see right here on the screen in my personal dividend tracker, which of course you guys can also grab, this is the first link down below in my description, but I currently earn around $7,700 per month on average in dividends, and this is being invested across almost 50 different holdings. But enough of all that, let's go over the pros of SCHD, for example. Number one would be there's no capped upside with SCHD. Now this is comparing this to JEPQ, which does have a capped upside, and this is because of the option overlay. Now this means that if the market or the underlying in either one of these different ETFs seem to really rocket for whatever reason, there is going to be no capped upside when it comes to SCHD because this ETF does not use options, derivatives, it's just invested in plain old stocks. Now this could be helpful, especially if the market is going through a bull market, and if the market keeps going up and to the right, you're going to most likely see a ton of gains from SCHD, for example, and again, there's no capped upside. Now another pro for SCHD is, of course, my favorite pro personally is the fact that this ETF has a massive dividend growth rate. Now over time, over the years, SCHD has paid us investors anywhere from around 8% to 10% to 12% more year after year. Now even though this doesn't necessarily equate to a boatload of cash year after year, over say 5 years, 10 years, 20 years, this can make things extremely different in your portfolio if you look at that dividend growth rate and extrapolate out long enough. Now also another pro when it comes to SCHD, there is a long track record. SCHD has been trading for over 13 years, and just because a stock or an ETF has been trading for a long time doesn't necessarily mean that it's better or worse than anything else, but it is nice, at least for investors, to look back at history and know that even if something happened in the past doesn't mean that it's going to happen in the future, but just to basically see how things have traded over multiple different time frames. Now also, SCHD is very cheap to own with an expense ratio of just 0.06%. The ETF is very well diversified, which definitely helps out on red days, just knowing that you're not having all your eggs in one basket. Now, along with that, a few more pros with SCHD is that there's lots of growth upside with uncapped upside, that is, and of course, SCHD is rather tax friendly. Now, some cons with SCHD, there's also maybe some bad things about the ETF depending on who you're asking. But first off, I would say it has a rather low starting yield. And again, this is in the context of comparing it to JEPQ. Now, 3.5% more or less starting yield, in my opinion, is not bad whatsoever. But again, comparing it to JEPQ, where you're getting a 9%, 10%, 12% yield, that is much, much lower. Now, also with SCHD, there's no option overlay, so there's no downside protection. Now, option overlays can protect somewhat of the downside. Again, take everything with a grain of salt, but there's absolutely no downside protection with SCHD. If the underlying goes down, so will the ETF. Now, also another con is that the dividend growth is going to take a long time, especially if you say have 100 shares or 200 shares. I mean, you're not really going to see a massive amount of dividend increase that's really going to change your life more or less. And again, I'm just talking generally for probably quite some time. Now, for me personally, as a 32-year-old investor that's looking to hold on to SCHD for 10 years, 20 years, 50 years, forever basically, the dividend growth hopefully is going to really kick in, maybe through years 7 to 10 of me holding. But again, to be fair, the dividend growth definitely takes some time. Now, lastly, the ETF doesn't have the fastest growth. There's not all that much technology exposure. There's not some of the hottest, flashiest names in SCHD. So that's probably also not going to allow the ETF to really grow as fast as maybe some other ETFs. So now that we talked about SCHD's pros and cons, and again, guys, comment down below any other pros and cons you think that SCHD has. Going over JEPQ's pros, first off, it offers a very high starting yield. Again, this is comparing it to SCHD's yield. I would say on average, JEPQ probably offers at least starting around 3 times more income than you would get for buying a share of SCHD. Now also, this ETF has a great option strategy. If you're a fan of covered calls or option strategies, JEPQ uses a very high quality one, at least in my opinion. Now also, JEPQ has the potential to quote-unquote retire you or help you live off dividends, dividend income a lot sooner compared to SCHD, and this is only though if you have a lot of money to invest. Now again, this is all predicated and dependent upon your expenses and everything else, but I'm just saying, generally speaking, if you have, let's say, $500K to invest, for example, and you bought JEPQ, you're going to generate a lot more income, again, comparing that to SCHD. Now again, this is all dependent upon how much you have to invest and of course how much your expenses are, so again, take everything with a grain of salt. Now also, JEPQ offers NASDAQ 100 exposure, which depending on who you are, what you like, I personally like that a lot. And lastly, it's a high quality fund. It's ran by JP. They have great fund managers. It's high quality management that definitely helps me sleep well at night. Now, some of the cons for JEPQ are no dividend growth. Whatever JEPQ pays is going to be based upon the previous month's volatility in the market, option premiums, etc. There's not necessarily going to be a massive steady dividend growth rate like we see with SCHD. Now, again, this might or might not be a deal breaker for you. For me personally, I do want to have a large portion of my personal long-term portfolio invested into names, whether it's stocks or ETFs, that do offer dividend growth because I want to try to keep up with inflation, if not outpace it, and a large dividend growth rate at least gives you a chance to do so. Now also, there's capped upside with JEPQ. Because of the option overlay, there is going to be somewhat of a capped upside. Next, you're also going to need a lot to quote-unquote retire. You're not going to be able to invest 10K into JEPQ or 50K into JEPQ and necessarily retire today or tomorrow. And I'm of course not saying that you can do that with SCHD either, but with SCHD's dividend growth rate, there is some compounding math that does make this one a little bit more favorable in my opinion. Now also, JEPQ might not be as tax friendly. And lastly, as far as cons go, JEPQ is relatively new, which again can be looked at as a con, again depending on who you're asking. And last but not least, struggles to regain after drops. Because the option overlay and because there is a capped upside to some potential, JEPQ is going to struggle during massive drops in the market, in my opinion, compared to something like SCHD. So there's all the pros and cons that I came up with personally when comparing SCHD to JEPQ. And the question, or really trying to figure out which one of these ETFs is the better long-term investment for you as an investor, honestly, you have to look into what both these ETFs offer and see which of them maybe track a little bit closer to what you're looking for. Now, for me personally, I have more SCHD invested in my personal portfolio, but I also have a boatload of JEPQ along with other premium income ETFs that basically do more or less the same thing. And that's again because for me personally, I want to have some upside, I want some dividend growth, but I also want a boatload of income because I want to use my income, I want to use my dividends and distributions to live off later on. So now that we went through all the pros and cons, at least I could come up with, when it comes to SCHD versus JEPQ, I lastly most importantly want to hear from you down below. If you could only buy one of these ETFs for whatever reason, SCHD or JEPQ, which one would it be and why? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.